This is Chris Vaughn with Family Wealth Planning Partners with our market commentary for the month of May 2021. Unfortunately, more negative news than positive this month, primarily due to our concern with inflation. We do believe that inflation is going to go up. There's several contributing factors to this, the first of which is government spending. Multiple trillions of dollars have been pumped into the economy over the last year due to the coronavirus pandemic. Historically, when you have that much money go into the economy from government spending and stimulus, inflation is going to follow. Some other factors that go into this. Currently, we are dealing with the Colonial Pipeline ransomware cyber attack throughout the southeastern United States. This is causing disruptions in the delivery of oil and fuel to gas stations throughout the area. Now, here in Kentucky, theoretically, we're not going to be impacted directly because of that, because the pipeline does not come to this area. However, the shortages will cause the price of gas and diesel to go up not only in this region, but throughout the country. Everything will be impacted by that we purchase in our consumer goods, because most items are trucked to our marketplaces. Also, there are hiring incentives. Most every place in the country is having trouble finding employees, and they are offering lots of hiring incentives, including cash bonuses just to show up for interviews. Eventually, these incentives will be passed on to the consumer in the things that we buy. However, it's not all bad news. Disruptive innovation still continues to drive the cost of inflation down as new innovations come to market. Secondly, the president has proposed an increase in long-term capital gains from 20% to 39.6%. When you calculate in the Medicare surcharge that goes on top of this for high income earners, that would bring the top capital gains rate to 43.4% if the bill is passed. Now, the big misunderstanding here, this is not for everyone. This is only going to impact people with an income in excess of $1 million in household income per year. The third thing that we're going to talk about today is real estate. Real estate continues to be in a boom market. Real estate agents have been complaining about not having enough inventory for quite some time. That continues to be the case. There are several major factors for this. The biggest one is current interest rates. As of the time that we're recording this on May 11th, we have about 3.2 is the going percent, or 3.2% is the going rate on 30-year fixed mortgages, and around 2.5% on 15-year fixed mortgages. This is driving the lumber industry to shortages, which is also contributing to our inflation problem. Although the interest rates are creeping up, we do expect them to stay relatively low for the next year, so housing will most likely continue to boom for quite some time. That's our market commentary for May 2021. Thank you very much.
The information given herein is taken from sources that IFP Advisors, LLC, doing business as Independent Financial Partners, IFP, IFP Securities, doing business as IFP, and its advisors believed to be reliable, but it is not guaranteed by us as to accuracy or completeness. This is for informational purposes only, and in no event should be construed as an offer to sell or solicitation of an offer to buy any securities or products. Please consult your tax and/or legal advisor before implementing any tax and/or legal-related strategies mentioned in this publication, as IFP does not provide tax and/or legal advice. Opinions expressed are subject to change without notice and do not take into account the particular investment objectives, financial situation, or needs of individual investors. This report may not be reproduced, distributed, or published by any person for any purpose without IFP's express prior written consent. Securities offered through IFP Securities, LLC, doing business as Independent Financial Partners, IFP, member of FINRA and SIPC. Investment advice offered through IFP Advisors, doing business as IFP, a registered investment advisor. IFP and Family Wealth Planning Partners are not affiliated. The information given herein is taken from sources that IFP Advisors, LLC, doing business as IFP, IFP Securities, LLC, doing business as IFP, and its advisors believe to be reliable, but it is not guaranteed by us as to accuracy or completeness. This is for informational purposes only, and in no event should be construed as an offer to sell or solicitation of an offer to buy any securities or products. Please consult your tax and/or legal advisor before implementing any tax and/or legal related strategies mentioned in this publication, as IFP does not provide tax and/or legal advice. Opinions expressed are subject to change without notice and do not take into account the particular investment objectives, financial situation, or needs of individual investors.